Hello and welcome back to The Note. We're going to take a trip to Sweden today. It's enjoyed a much stronger recovery post-crisis than the countries in the Eurozone. Many people are very interested in the Nordic model, but there are also strong questions now over its monetary policy, whether it's facing deflation and also whether it's facing a bubble in its housing market. With me now to try to explain this and make some predictions for the future is the Chief Economist of SEB, Robert Bergqvist. Robert, thank you very much for joining me today. Let's start by taking a look at inflation compared to the Riksbank's target rate. Paul Krugman of the New York Times has suggested that the Riksbank tightened too soon, more or less forced Sweden into a deflation that wasn't necessary. Is there any justice to that? Has the Riksbank tightened too soon?
I think the Riksbank tightened too soon when it started in 2010, but yes. I think that is not the main explanation for the low inflation that they have right now. I would say that the reason that is Sweden is a small open economy. We are very dependent on the international environment, and I can see today that you have lots of unutilized resources in Asia, in the US, in Europe. And that will continue to exert downward pressure on inflation, and that will also affect Sweden. So I can say that when I look at the Riksbank and their behavior, I think they have been maybe a bit backward looking. I think that the Riksbank they have not adjusted their economic models to this kind of new inflationary environment. The globalization in the world economy has changed the inflationary landscape, and for Sweden as a small open economy, we have not been prepared for that kind of development.
And particularly as you're very close to the Eurozone, that getting over half of exports to the Eurozone, right? I mean, that presumably must have been a very serious shock to
exactly. If I look at the economic developments, well, we have seen a recovery, of course, of the Swedish economy, but we had expected stronger growth. But the problem right now, that is exports. And since 40-45% of our export is going to the euro area, 70 to 75% is going to Europe. If you have problems in Europe, we have to share that kind of problems. And I can see still lots of problems within the euro area, and that will be a negative factor for economic growth in Sweden going forward.
Okay, now let's just take a look at that growth in context. And what's impressive is that Sweden has outgrown even Norway, despite the huge advantage Norway has in its oil supplies, and that although people tend to think of Scandinavia or the Nordic countries as one block, there's very great divergences compared to Finland and Denmark. What's going for Sweden that isn't going for Finland?
Well, I would say that we have seen in Sweden during the crisis, the global crisis that we had in 2008 to 2009, we had a quite kind of substantial weakening of the currency, depreciation of the Swedish krona. That was good for the export industry, and I think that helped the recovery for Sweden. And another factor, that is Swedish government finances. Sweden, we have had, since government debt is at very low levels, we have had the flexibility to spend more money to support economic growth.
Right, whereas Denmark is a quasi-member of the Eurozone, has less flexibility.
Exactly, and for Denmark you have had another problem, and that is the housing market. You had a kind of substantial correction in the housing market in 2008 and 2009. Home prices declined by 30 to 35%, and of course that had a very large impact on household consumption, and we haven't seen that yet, maybe I should say, for Sweden.
Well, that brings me to my final question. You have this very strange situation where Swedish house prices appear to be in somewhat of a bubble, while overall consumer price inflation is actually negative. What's driving the Swedish house price market? How can you bring those house prices down without creating even more of a deflationary environment?
Well, I think that the main reason for the high house prices in Sweden, that is a kind of structured deficit of housing, because the last 10 to 15 years we have had a kind of underinvestment in houses, and that means that as long as you have this kind of deficit, and it will remain for some time, it is good for the housing market because it will keep, I think, prices at a high level, but it's not good for the economy because it means it has negative implications on labor market mobility, because people cannot move between cities, and that is a big problem right now.
Okay, Robert, thank you very much indeed. I hope that was a useful tour of the horizon. There are a lot of lessons to be learnt from Scandinavia and Sweden. It's no coincidence that a lot of investors still find their currencies in particular a very interesting playground.